Welcome to Bitcoin Technical Analysis today with Tone from Brave New Coin and George, a technical analyst. Hi guys, how's it going?
Hi.
Very, very
Great.
good.
So, George, you're going to talk today about the US dollar and interest rates. Tell us a little bit about how it looks.
Yeah, first I'll just talk about the S&P briefly. Like we've talked about in the past, we're holding above the August 24th low, and so far that seems to be the number that we'll be targeting on the downside. Couple interesting things though. I mean, today we put in a hammer, if you're into candlesticks, it looks like. Came out of the Bollinger Band and came back in, but if you look at the Bollinger Bands here, you can see how wide they've gotten, and that's just an indication of how bad the volatility is. But we're still holding in. I mean, obviously we've broke it. You've gotten a death cross in the S&P, but we're still holding above these lows, and those levels around that 1872 level will be key. Next chart I have is the 10-year on 10-year yield. Those, as we've mentioned before a couple of times, the three moving averages are compressing on top of each other, and they still are there, really tight. It's moved to the downside so far, but it hasn't broken below lows in recent months. So I think it's still a matter of which way it's going to move, and you got some more dovishness out of the Fed today, and then also some Yellen saying that there's a potential to raise rates at the end of the year, so more confusion. So really, we're still in an area of just confusion, and investors just don't know what to think. You're getting mixed signals out of the Fed as far as if there's going to be a rate rise or not, and people don't know how to act. And the dollar is giving you the same exact signal. So the dollar, initially after the Fed spoke last week, sank and came down to a critical level right near the 200-day. After that, it went back up, and it's been up since, and it's back above all of its moving averages, the 50s on top of the 100 on top of the 200, and today it fell really hard below the 50 and the 100, but then rallied to where we are now based on the Fed and them talking about potentially raising rates. So there's confusion reigning, and there's two big areas of support. So it's 94 level and the 93 level down here. Just to show you, now I'm just going to talk about what the strong U.S. dollar has done to emerging market economies and how bad it's really been, and the reasons why. I wrote an article about this the other day, so I'm just going to talk about the charts. So this is the trade-weighted U.S. dollar index, and as you can see, it's at highs that it hasn't been at in a long time versus every other currency. This dollar, the problem with the U.S. dollar being so strong is that you have a lot of emerging market debt that's denominated in U.S. dollars. As the dollar gets stronger and their currencies weaken, it's very hard for them to repay debt. So here you see the countries that have been getting clobbered by that. Their currencies are down dramatically. The Brazilian real, Turkish lira, Colombian peso, rand, etc., etc. So they're all getting really hurt by a strong dollar, and that's being supported by this whole entire, is there going to be a raise in interest rates or not? Their purchasing power versus the dollar is down dramatically this year, minus 60%. And you could see what happened in Kazakhstan the other day. They have a lot of dollar-denominated debt. They had to actually, they were pegged to the USD. They had to unpeg, and this is what happened as a result of that. Massive devaluation. Here you see that it's not only happening in the emerging markets. You have Australia. The problem is countries that are commodity-tied are also getting hurt really badly, as commodities in the US dollar have an inverse correlation, and commodities have gotten absolutely clobbered. So here you can see what's happened to Brazil. I'm going to show you an example of Brazil. It's probably the textbook example of this whole thing. During the commodity cycle, which is this chart here, you saw how its debt rating, its country rating was affected. It was positive, and commodity prices went up. But here we are in the cycle as commodity prices have spiraled down, where its debt is now rated junk. As the U.S. dollar has gone higher, this is the dollar versus the real. The real is at near all-time lows versus the U.S. dollar. In fact, I read somewhere that its credit default swaps are higher than Lebanon's right now. So here you have all the Brazilian debt that's denominated in U.S. dollars. It's a tremendous amount. It's really been crushing them. And as you can see, the government bond yields have gone up to 15%. So what you're seeing here is that they can't even their debt is so bad and mismanaged at this point that managing their domestic liabilities is becoming a serious problem. They've been rated as debt. In order to finance their debt and to borrow, I mean, you're going to pay exorbitant amounts. There's a massive economic contraction that's happened in the emerging markets, and this is all over the place. And that's why the Fed has been really cautious. So if they do raise rates, it could be really problemsome here. And that's really all I have right now.
Okay, thanks a lot for that. Tone?
Yeah, George, that was pretty good. I'm gonna check out that article definitely. Yeah, no, I have to agree with George. And if the Fed would have raised interest rates, it would have made all those problems even worse. Because of other countries are taking out U.S. denominated debt, which is absolutely terrible. So I'm gonna talk about Bitcoin a little bit, very briefly. Let me pull up my chart. And Bitcoin, again, has been doing nothing. I am totally neutral on Bitcoin. If you can see my chart, the MACD is completely flat. The RSI is also pretty much flat. We are under the declining 50-day moving average. We just had the def cross, and it's not looking too good. We had a little bit of a bounce today. We'll see how it lasts, but I'm not even paying attention to Bitcoin until I see it above 240, preferably above 250, or below 220, preferably below 200, to show bearish signs or bullish signs. Right now, Bitcoin is in a major wait and see as well, so there's really not much to report. Let's briefly go through some of the other ones. I guess we'll start with the S&P 500. This is just a screenshot of my futures account. That's a daily chart. And again, the S&P is, like George said, it's been up and down. So I'm going to draw right on the chart. Let me see. So we had this candle here, which must have been, oh, not what I wanted to draw. Hold on one second. Let's take the fill off. There we go. So this candle here can definitely play a lot of tricks. It's shooting star candle, which is significant, indicating a downtrend. But as this was happening, what you have is a flat line here to give the impression that we are on a breakout. So this could have definitely fooled a lot of people. I was not trading the S&P 500 at the time. Now we're going down, and again, as George said, we now have a couple of hammers slash dojis, well, doji first, then a hammer. And again, this is a sign that we could rebound, and we can also put a straight line right here. So we have support at 1900 and resistance just below 2000. And as long as S&P is in between these zones, I mean, you can try and trade the range. But if you're wrong and it falls out of the range, then you could be in trouble. So be very careful with your stop losses. I am expecting the market to turn in October. I'm expecting good things for the S&P 500. I am expecting it to go up, but it's hard to say whether we hit the bottom right there or we're going to actually hit the bottom in October. September and October are both famous for crashes, and October is very famous for turnarounds. So we can easily have one more scare similar to this to get the entire world bearish, and then we turn in October and go up. So, but I am not trading the S&P 500. It's a little, I'm not sure where it's going to go, so I'm just going to wait and see for a while. Briefly, let's talk about oil. I was actually with George at a seminar, so he watched me take a huge hit on oil. To me, this right here looked like a nice descending triangle. So taking a really bad chance, I played the triangle to the downside, and I did that on this circle that you see there. So I was short oil going into the rate announcement, which was a bad idea, even though the rate did not move and oil should have fallen. It should never have gone up. So I took a hit on this and I got out of oil. As you can see, I have no positions. It did come down, and again, we can now draw an even bigger triangle. And this is where, again, people can get in trouble, is in that we broke it to the downside, but it didn't stick. So my outlook for oil is still bearish, but if you're wrong, it can cost you a lot of money. So I will be looking to go bearish again, but it's a very pricey endeavor if you're wrong, just like what happened to me over here. Now, continuing on bad trading decisions was silver, which also showed me, at least, that it's ready to break down. My outlook for silver is bearish, as I'm expecting the dollar to continue to appreciate in price, and commodities to get clobbered again. So I was short silver, as you can see, and I'm still short silver as a 14.31. And I got hit in this area, but I stuck around. And this red candle here put me back in a decent position. But today, this does not look good. But again, the dollar was weak in the morning. The dollar rebounded all the way, as George pointed out, but silver did not. So I am expecting silver to go down. I'm sticking to my short position. I have a pretty lenient stop loss. This would be a very costly trade if it does hit my stop loss, but I'm giving this a chance. I think this high will hold, and I am expecting lows in silver in the near future. Now, last one is gold. I did not jump the gun on gold. I actually shorted gold at 11.25, as you can see right here. As I said in this video a few weeks ago, I shorted gold actually the day of the announcement. It hit my limit sell order. It did not look great for the next few days, as it made a high of 11.40. I was profitable on 2 occasions, yesterday and 2 days ago. But today, gold also did this, along with a fall in the dollar, but the dollar has now recovered. I still think this high will hold, so I'm giving gold a little bit of leeway, and I'm going to hold on to my short, hoping that we start to go back down. And I am expecting new lows, so I have a pretty lenient profit down there below 1100. So that's pretty much my outlook. So this has not been a very good week because I'm trying to short commodities, but they did not cooperate. But that is what trading life can be like. That's pretty much my update. Back to you, Theo.
Yeah, don't triangles do that sometimes? They just break out and then you make another triangle and then another triangle.
Yeah, I mean, I love my triangles. Everyone that sees my charts, the triangles have been working for me historically in my life of trading, but sometimes they don't work out. The law of averages stays in my favor, but this past week was not very good, but it's not over yet, so we'll see.
Thanks a lot for watching today. That was Bitcoin Technical Analysis. See you next time. Bye-bye.